All right, UBS, the big global banking concern, says, you know, interest rates are low. No flies on them. These guys get paid millions of dollars to make an insight like that. Nevertheless, UBS goes a step further that it not only does it clearly create a bond market bubble, but by extension, a global housing bubble. And to be fair to UBS, they start pinpointing the cities worldwide that seem to be the most vulnerable to a bubble that could burst. Vancouver, I saw that for myself. I mean, they're just treating real estate like chips on a gambling table. London, but by extension, they go to Stockholm and Sydney and Munich and Hong Kong, key cities across the globe where the pace of activity and the double-digit advances in real estate values is something that UBS says is unsustainable and can only be corrected by, well, a bubble bursting, a crash, if you will, a fiscal hawk. Larry Winget on that. And Larry, I remember during the last housing crisis, you were saying, if it seems too good to be true, it probably is. If you're trading properties, you know, like stuff on a buffet line, then you've got issues. I don't think that's as big a problem in this country because we're not quite back to where we were. But in these cities, Vancouver particularly, they're there and then some. So does UBS have a point? Should we worry?
I don't think we have to worry right now in our country, as you said. You know, interest rates matter a lot to you and me, and it matters to people in the economy and the banks and so forth, but to the average guy on the street, I mean the guy with an average job, average number of kids, average amount of income, the interest rates don't really matter that much to him. They are not the driving force in whether he's going to go out and buy a house or not, whether he's going to borrow money to buy a car or not, or open up a new credit card account. What matters to this guy is that he lives in a house and he's got more kids than he does bedrooms, or he's got a promotion and now he can afford a little more, and he's going to buy, he's going to borrow, whether he sees the interest rates go up a point or down a point. None of those things really matter to the average guy.
Here's where I'd flip it around and get back into your wheelbarrow, the issue that you made a big deal about, and that you got to save, you got to take responsibility, and a lot of people are looking for quick, easy money. Not that real estate is returning to the days if you had a pulse, you got a mortgage, but fears that it could, that a lot of people are playing the real estate market much as they did in those early days where they would buy and sell properties before even physically seeing them. And that for a lot of young people in particular, that looks like a good, quick, easy money-making opportunity that won't require much sweat equity. What do you make of that?
Well, the words quick and easy rarely have much to do with long-term financial gain, in my opinion. I used to be one of those guys that would buy property sight unseen. It was a good time to do that back in the day. And I got burned a little bit on a few properties, too. We all did, I think, that played that game. And remember, when you play a game, and that's what this is, there's a likelihood you may lose that game. I think that we need to take a deep breath, and especially young people who are looking at good investments. I think there might be a better way to win long term than throwing your money at real estate when that might not be the best place to put it right now. Make sure that you've got the money, you can afford to make the payments, but don't gamble when you might have a high risk and might lose your money.
Well put, as it is always, Larry. Thank you very much. Good seeing you again.